Output method, that is from the, what is the percentage of completion of the total assigned job? It is from the viewpoint of the customer. Output method recognize revenue on the basis of the direct measurement of the value to the customer of the goods or services transferred to date relative to the remaining goods and services promised under the contract. What is the total value? Has to be transferred to the customer. Value of what? Value of goods and services. And what is the value that has already been transferred? That is the percentage of completion. Revenue recognized at that percentage. Examples: surveys of performance completed to date. Customer surveyor certifies that the work is 45% complete. That means revenue can be taken as 45% of total transaction price. Appraisals of results achieved. What is the result that is to be achieved? To what extent the result has been achieved? What is the percentage? Revenue on that basis. Milestones reached. What are the milestones to be reached? To what extent milestones have been reached? What is the percentage? Revenue recognized on that basis. Time elapsed. The contract is for 2 years. 1 year has elapsed. So out of 2 years, 1 year has elapsed. That means 50% complete. So revenue can be taken as 50% of the transaction price. Units produced. How many number of units to be produced? 1000. How many already produced? 700. It is 70% complete. So revenue should be 70% of transaction price. Lastly, units delivered. What is the number delivered? To be delivered? 1000. Units delivered? 650. That means it is 65% complete. So revenue can be taken 65% of transaction price. Let's see an example. On 1st October 20x3, NTTA year-end 31st March entered into a construction contract for CU 25,000. Expected date of completion is 31st December 20x5. The estimated cost to complete the contract is 19,000. For the reporting period ended 31st March 20x4, that is 6 months. Cost incurred 6,000, work certified 7,000, payment received 6,000. So expected profit is the difference between the contract price and the expected cost. That is 25,000 minus 19,000, that is 6,000. The percentage of completion is 7,000 divided by 25,000 into 100. Total contract price is 25,000. Work certified is 7,000. So 7,000 is 28% of the total contract that is completed. So profit has to be taken on that percentage, 20%. NTT estimates 35% of the work has been completed. That means 7% of the work not yet completed. So the entry is what? 7,000 revenue, that is taken as revenue, that is work certified, and cash received is 6,000, so 1,000 revenue is still receivable. And contract asset has to be created for 175, that is the 7%. 35% work has been completed, certified 28%. So 7% is contract asset, because this is a right on the customer, amount recovered from him, but it is conditional because the entity has to perform other performance obligations. So we create one contract asset for 1750. That is the 7% work completed but not yet certified of 25,000. So revenue is 7,000, cost of sales 28% off, total expected cost 19,000, so profit is 1680. Receivable, work certified 7,000, amount received 6,000. Amount received is always less than work certified, remember this, 1,000. And contract asset 1750 and corresponding contract liability 1750.